NVIDIA. Market's up big today. NVIDIA's moving, as you know. Let's look at our strike prices for trades if you were considering a bullish trade in NVIDIA. Now, with NVIDIA trading right about $104, we're going to look at something in the diagonal family, called diagonal, taking a bullish posture in NVIDIA. Going out to the May 16th expiration. Remember, NVIDIA has earnings on May 28th, so we're still ahead of earnings. That won't be the case in Meta Platforms, but in NVIDIA, not till May 28th. So we're going to go out to the May 16th expiration by the 103 call. Look at the expected move. Remember, we're midweek already, so you've got to start to tighten up those strikes because the expected moves are coming down ever so slightly. Using that right column on the Thinkorswim platform. Selling the April 25th 107 call, so only $4 wide on this diagonal. We put that in around $5.05, trading about $5.20 right now, $5.15, $5.20 range as the stock has moved slightly higher. So the risk on this is whatever the debit paid. You're looking for a move. Remember, the move for the rest of the week in NVIDIA is still $9. I'm sorry, nope, that's not, that's next week, $4. That's why we've got that lined up a little inside that. Could you do the 103 or 104, 108? Of course you could, yes. But for this, remember, the most important thing is the strategy. So the 103, 107 call diagonal in NVIDIA, trading about, about $5.15, $5.20 range. You're looking for a move towards that 107 strike, and the risk on this trade is the debit paid. You're collecting theta. You're long about 27.5 deltas in NVIDIA per each call diagonal.
In recent weeks, NVIDIA has had its fair share of bad news, ranging from a suspension of its exports to China to concerns about taxes on its chip imports into the United States. The normally high-flying stock has therefore flown significantly lower in recent years. NVIDIA has dropped 26% since the year began, following an 800% increase over the previous 2 years. NVIDIA said it would pay $5.5 billion after the United States recently told it that it would require a license to sell its chips to China, which would prevent it from fulfilling existing orders. This comes against the already challenging backdrop of impending import levies. Electronics were temporarily exempted from tariffs by President Donald Trump. Since NVIDIA makes the majority of its best-selling artificial intelligence, AI chips in Taiwan, investors are concerned that Trump's plans to tax imports could raise the company's expenses and hinder growth. Tariffs may also affect NVIDIA's clients, which could cause them to cut back on AI spending. However, investors found some respite from the uncertainty this week when an executive at Amazon Web Services, AWS, made a comment. In actuality, NVIDIA stockholders received excellent news from AWS. But first, let's look at NVIDIA's current position in the midst of the current crisis. The leading manufacturer of AI chips, or graphics processing units, GPUs, in the world is NVIDIA. NVIDIA has developed an AI empire with the aid of these chips as well as associated goods and services. Since NVIDIA has the resources to assist clients with all of their AI requirements, CEO Jensen Huang has even referred to the company as the on-ramp to AI. As a result, NVIDIA's revenue has increased to double and triple digits, hitting all-time highs recently. NVIDIA announced a staggering 114% increase in revenue to $130 billion for the most recent full year. And the company's data center division, which serves AI clients, accounted for 88% of this. As a result, NVIDIA's growth prospects are directly tied to the spending intentions of its AI clients. From this perspective, the year got off to a good start, as businesses like Alphabet and Amazon declared their focus on investing in AI, while Meta Platforms stated that it will spend up to $65 billion to promote AI growth this year. But as overall market volatility increased, investors began to wonder if this would last. So, what implications does this have for NVIDIA's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on NVIDIA stock in the comments. Your support truly helps us grow. Now, let's get back to the video.
NVIDIA is still our top AI pick, and I know that that is probably at this point exhausting to hear. The stock has not worked this year. It really hasn't worked the last 6 months. But I think if you look at the bottom line, 21 times forward earnings. I think those earnings are pretty solid. We've de-risked the China issue now with the H20 ban. And I don't think that the hyperscalers, no matter what happens in the economy, are going to stop spending on NVIDIA chips. So that is still the name that our models are sticking with.
And you still think that NVIDIA, I mean, one of the things, though, that we've been talking about for months now, by the way, including Andy Jassy, who was on the broadcast just last week, talking about how ultimately the price of these chips has to come down. Like, this whole thing doesn't really work unless the price comes down. And who would eat that price? NVIDIA more than anybody else.
I think you'll see over time, and this happens always in tech, right? Prices come down and the ability of whether it's software or hardware improves over time. That's the story of technology. But I think the other side of the AI bull market is really, what is the consumer side? What is the enterprise side for demand for these products? And what we're seeing over the last 3 months, and I don't think this is being reflected in stocks at all, is that there is huge demand for these products. And I think it's increasing and even accelerating with the O3 model launched last week from OpenAI. You have Grok from xAI. You have Gemini's new model from Google. All three of them have said they have capacity constraints in terms of what they can serve to customers right now. I think the demand will be there to force more chip buying, even if prices do come down.
Trump's tariffs, according to analysts and economists, may raise costs for everyone and cause the economy to slow down or perhaps go into recession. The International Monetary Fund just this week forecast that U.S. growth would drop to 1.8% this year from 2.8% last year. Investors have been keeping a careful eye on any modifications to firms' plans to spend on AI in this scenario. In fact, during one trading session earlier this week, shares of NVIDIA fell due to an analyst report indicating that AWS is slowing down its AI spending. One of NVIDIA's biggest clients is AWS, which sells its goods to cloud users. But the wonderful news came soon after. In a LinkedIn post, AWS Vice President of Global Data Centers Kevin Miller specifically addressed worries over the company's AI infrastructure initiatives, and his remarks don't point to a slowdown. He stated on Monday that this is standard capacity management, and that our expansion plans have not seen any significant adjustments recently. He said that any changes are instead the result of AWS taking into account many solutions simultaneously, which enables it to, for instance, reduce capacity in one region while increasing it in another. Therefore, no recent actions have resulted in a capacity loss. AWS still sees strong demand for core workloads and generative AI, Miller continued. All of this indicates that demand for NVIDIA's goods and services isn't declining, despite potential obstacles like tariffs in the months ahead. As the leader in AI, NVIDIA is well positioned to profit from customers' continued significant investments in the technology. In the belief that AI would increase their efficiency, businesses may even be compelled to prioritize their AI initiatives if economic development slows. Therefore, even if NVIDIA can see some short-term setbacks, this company is still probably going to provide investors with a long-term gain. To stay informed about the latest developments from NVIDIA and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on NVIDIA stock, so please share your opinions in the comments below. Now, let's dive into today's video. Trump's tariffs, according to analysts and economists, may raise costs for everyone and cause the economy to slow down or perhaps go into recession. The International Monetary Fund just this week forecast that U.S. growth would drop to 1.8% this year from 2.8% last year. Investors have been keeping a careful eye on any modifications to firms' plans to spend on AI in this scenario. In fact, during one trading session earlier this week, shares of NVIDIA fell due to an analyst report indicating that AWS is slowing down its AI spending. One of NVIDIA's biggest clients is AWS, which sells its goods to cloud users. But the wonderful news came soon after. In a LinkedIn post, AWS Vice President of Global Data Centers Kevin Miller specifically addressed worries over the company's AI infrastructure initiatives, and his remarks don't point to a slowdown. He stated on Monday that this is standard capacity management, and that our expansion plans have not seen any significant adjustments recently. He said that any changes are instead the result of AWS taking into account many solutions simultaneously, which enables it to, for instance, reduce capacity in one region while increasing it in another. Therefore, no recent actions have resulted in a capacity loss. AWS still sees strong demand for core workloads and generative AI, Miller continued. All of this indicates that demand for NVIDIA's goods and services isn't declining, despite potential obstacles like tariffs in the months ahead. As the leader in AI, NVIDIA is well positioned to profit from customers' continued significant investments in the technology. In the belief that AI would increase their efficiency, businesses may even be compelled to prioritize their AI initiatives if economic development slows. Therefore, even if NVIDIA can see some short-term setbacks, this company is still probably going to provide investors with a long-term gain. To stay informed about the latest developments from NVIDIA and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on NVIDIA stock, so please share your opinions in the comments below. Now, let's dive into today's video.
Going to this need to focus in on generative AI, the opportunity by a company like Intel, is it still all about AI? Are we able to focus on the long-term opportunity when you've got headlines just now from Trump saying, well, that the US will have a fair deal with China?
Yeah, look, AI is the next revolution that we have to chase. So it is important that Intel fixes its house. But, I think Intel has kind of lost the game on AI. What they have to figure out is if they can hold the kind of prowess on manufacturing and catch up with TSMC, because that becomes a more strategic imperative than being able to develop a competing AI chip to NVIDIA.
How I saw manufacturing that was meant to be coming more to home, Ohio, for example, that then gets pushed back because of current quandaries about whether there's going to be government support for the CHIPS Act anymore, whether there's going to be money coming from the government. How is Intel or any chip maker currently to navigate whether they invest in the US or not?
Well, definitively, we need to invest in the U.S. I think the administration has made it very clear. I think it is a necessity that we start investing in the U.S. So I am completely on board with that. I don't actually think that the lack of CHIP Act funding is the reason that Intel is not investing in the U.S. I believe that they've actually lost the benefit of being first. And they are struggling with going from one node to the next. We'll see where they are on 18A, which is the next node. But as of right now, they're still outsourcing to Taiwan Semi, which shows you that, in fact, TSM has taken the lead on these last few nodes.
And we will find out more Thursday evening when Intel posts numbers. I think they'll have to answer a lot of those questions. Earnings is so interesting, right, in the context of everything happening around the world. I want to bring up this chart, which is average EPS surprise. And we're still kind of rattling our brains a little bit, Anka, about the Tesla share performance in this session relative to the numbers it posted. And the reason I like this chart, I find it so interesting, is that actually Tesla has a terrible track record compared to the other Mag 7 names in positive surprise on EPS. That's all to say, do you think that given the macro environment right now, all of these names might get a bit of a pass this quarter?
Yeah, I think sentiment has gotten so dire that many of these companies are putting up okay numbers. Like you look at iSurge yesterday in healthcare space, the numbers were okay. However, it was better than expected. Tesla, the same way. The numbers were okay, but they talked about, I think, some of their growth drivers, which are humanoids. They talked about how they're going to have autonomy by the end of this year. I think he said millions of vehicles by the second half of this year. And even if it's not second half of this year, as long as there's a roadmap to true autonomy, I think that's what's going to drive the next leg in Tesla, not necessarily the margins on the auto side.
They also pulled guidance. Do you expect that to be a move elsewhere in the Mag 7 names?
I think that we could get many companies not actually giving any guidance because the uncertainty is high. So if you're a CFO or a CEO trying to navigate this market, you really have a hard time right now because, what do you guide to? Do you guide to 145% tariff or 40% tariff from China? Do you guide to, and what you're seeing today, for example, in Vertiv basically has assumed, or in iSurge have assumed, full tariff impact. So, iSurge last night, the CFO said 145% tariff is what they have included in their guidance and have guided that way, and just in order to buffer any kind of impact on their earnings.
You say it's difficult for a CEO, a CFO to navigate. Boy, is it also difficult for you, an investor.
Oh, for sure.
So do you remain committed in the longer term? Do you stick to the longer term narratives that have driven these stocks higher over the last couple of years, or do you pause, do you take money out?
So I think if you haven't taken your money out already and protected yourself, now is not the time to do it. So that's the first thing. Secondly, by September, I will go out on a limb and say by September we are no longer going to be talking about these trade wars. And we will have moved on to something else, and maybe we'll be looking at the midterms and how great the economy is doing, but it won't be the trade wars. So I think this is a kind of a short-term focus geopolitically to play a game that the U.S. The administration is currently playing. However, it will be behind us shortly.
Although both NVIDIA and AMD are major suppliers of hardware for artificial intelligence, AI computing, NVIDIA is far bigger and more successful than AMD in this market. Both, however, are still far from their peak after the most recent market sell-off, with AMD down almost 60% and NVIDIA down 30%. The most important part of training AI models is the graphics processing unit, GPU. The GPU was created in 1999 by Jensen Huang, the CEO and co-founder of NVIDIA, and AMD also produces GPUs. These gadgets have a special quality. They are capable of handling several computations at once. They are therefore perfect for tasks requiring a lot of processing power, such as artificial intelligence. Additionally, by joining several GPUs in clusters, which currently number over 100,000 GPUs, users can amplify the effects of parallel processing. NVIDIA has profited from the enormous market for AI computing, and that's a lot of processing power. Overall, NVIDIA's income has climbed significantly since the beginning of 2023. A sizable portion of NVIDIA's $131 billion overall income comes from data centers, which include the GPUs utilized for AI computation. Over the previous 12 months, data centers contributed $115 billion to this total. Given that its data center division's revenue increased by 94% in the last 12 months, AMD has also benefited from the growth in data centers. Although it's a great growth, it's nothing compared to what NVIDIA said. AMD made $12.6 billion from its data centers in 2024, about a tenth of NVIDIA's total income. Additionally, NVIDIA's data center segment grew 93% in the most recent quarter, while AMD's data center grew 69%. Therefore, AMD's data center business is not necessarily growing faster merely because it is smaller. AMD finds it difficult to compete with NVIDIA's 1-2 punch of faster growth and larger scale. Moreover, AMD has other products that haven't done as well as its data center segment, whereas NVIDIA is just interested in GPUs and the products that support them. AMD's overall growth rate has suffered as a result. As a result, even if the data center business has performed well, AMD's revenue hasn't even reached double-digit growth, while NVIDIA's has increased by around 400% since the beginning of 2023. This is a serious issue, which explains why AMD's stock has underperformed in the last 12 months. However, is it ready for a resurgence in 2025? It isn't that much less expensive, with AMD trading at 19 times forward earnings and NVIDIA at 23 times. You would expect AMD would trade at an even greater discount considering its considerably smaller market share and how badly it has underperformed, but it doesn't. Because NVIDIA is a far stronger firm with a substantial presence in one of the biggest computing marketplaces to ever arise, I believe it is the much better investment here. Furthermore, NVIDIA appears to be a smart company to purchase at this moment, since its present price tag is not far from the 19.8 times forward earnings of the broader market as determined by the S&P 500. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.
Tell me a little bit about the options flows.
Yeah, so Nicole, obviously we had a pretty decent day, especially when we started off, but it was just maybe a little bit unsustainable to the upside here, and we have seen a little bit of a pullback. Now, when you're looking at the market breadth, we are still seeing around 69% of the stocks in the S&P 500 in the green so far, but you are starting to see a lot more put flows coming into the S&P 500 options, especially when you're looking at the 5350 puts, really expiring this Friday as well as Monday. Those started to creep into the market here a little bit, and the price price action starting to also follow that. So kind of going into the close, what are we really looking for? We have this downtrend pattern that took place. We actually had this lopsided head and shoulders pattern as well, right when we kind of crossed that 5,400 level, and we did break that neckline, and that break of the neckline is actually bearish so far, but we are trying to hold at least this 53-57-ish area here. So if we go back and we're actually able to defend that, move higher here, we do have some pen risk sitting at around 5,400, as you kind of talked about in the opening here. And if we try to push up a little bit higher, looking at maybe 5,410, unless we get a massive rally to close here. But if we break down even further, you're looking at around 5,350. That's a key level to defend. And if we are unable to defend that, we could actually create a little bit more of a void or some pressuring to the downside here, Nicole. And that's when you're starting to talk about 53.25 to even 5,300 going into the close, which sounds like a long way away. But unfortunately, what you're seeing is the lack of buying activity kind of taking place throughout the day. You're seeing a lot of profit taking happening right now, and unfortunately that's just putting some downward pressure on the market. If we're looking at the longer time frame, though, I do want to kind of call this out. The candlestick also does not look great today. Yes, we are up 1.3%, but we have something that's called a shooting star pattern, meaning that we open high, we try to push higher, but we had some sellers kind of pushing us down, and now we're actually lower than the opening print for today. And unfortunately, that also aligns with the 20-period moving average. That's actually a bearish pattern or bearish candlestick. Now, once again, we still have green on the screen, but this is a reversal pattern, and we also have a gap to the downside here, keeping this wedge pattern intact here. So hopefully we're able to recover a little bit with the remaining 24 minutes left to go in the close. But this is really not the action that you would like to see if you're a bull, really trying to break out to the upside, really trying to overcome some of these key areas of resistance like the 20-period moving average, this downward sloping resistance line or support that flipped into resistance line for the last 3 months or so. And unfortunately, once again, it seems like the selling pressure is really overcoming any type of buying enthusiasm right now.
Right. And sometimes the open is the highest point of the day. That was not the case when you said, if we drop below where the open was, the highest point was 54.69, right, today?
Yeah, 54.69. And this morning, we were actually calling out the 54.80 level as your potential area of resistance. So rightfully so, we were about 10 points away from that, where you did see some pressure to the downside. And I think it's also just the messaging, as you were talking about pretty much throughout the whole show, and what we've talked about pretty much all day today, is the news flow. And we had some very positive rumors coming out, but as the day went on, we started to get more clarity as to what the Trump administration is looking forward to when it comes to maybe potentially reducing the China tariffs and things of that nature. And that news flow really didn't really help us out. And so we're kind of getting more clarity, and it looks very heavy at these particular levels. But once again, a really strong showing. I mean, to have an up day of around 1.3%, you still want to take what you can get, but the lack of follow through leads you to maybe a little bit of cautiousness that maybe some bears could actually step in and try to knock this down, and at least try to test that gap that was actually developed because of today's opening print.